Multifamily Mindset
podcast. Think bigger.
All right, welcome back to the Multifamily Mindset podcast. I'm your host today, Will Mussack. Usually I'm behind the camera, but today I'm in the interviewer seat, and I'm interviewing someone you know very well, Zach Rucker. And Zach, I wanted to get straight into it, man. I want to see you humble brag about yourself, and can you tell me about the deals that you're currently under management, that you have under management, and what's coming down the pipeline?
Yeah. Well, it's a long story with that, but super excited to be on this. Deals. I've currently worked through 3 deals with the previous partnership, and now I'm working with EFIS Capital. If anyone knows them, jumped on and partnered with them actually earlier this year. So 6 months in, and we've been crushing it and working on deals. Got 2 deals in the pipeline that we're closing here, one in June, one in July, and now looking for the next one. Got a handful of deals, that we're just analyzing and looking through to get the next one closed.
That's awesome. Deals is what it sounds like.
That's right. Yeah.
Yeah. So how many units do you have under management right now? And can you quantify that for us in units and dollars?
Yeah. So so on the dollars, again, previous partnership, it was about 33 million assets under management, which was close to 400 units. And then EFIS Capital has about 60 million assets under management, but moving up to, with those under contract, will be up to 80 million assets under management there. So combined of just what I've been working on will be just surpassing 100 million that I get to work with, and getting close to 1,000 units with that as well. So kind of exciting working with that.
That is super exciting. I had no idea that was the number. I'm glad I'm asked, and talk about a humble brag. So moving on from that, you've helped place tens of millions in capital and evaluate thousands of units. But when you zoom out, what's the part of the journey that you're most proud of?
Just making it happen. I love real estate, and those that know me from the coaching side, like I love coaching. I love the fulfillment of it. I like, creating an impact. And so the best part about all of it is being able to change communities and help change people's lives. So that's from the tenants that we get to go on to these communities, these apartment complexes, and improve their units, the environment, the tenant base, so that they can really enjoy that space and call it home. That's a huge impact that I love to see that change. And then our investors, to see people learn about real estate, that they can invest in this and own a piece of apartment complex, and then start to receive distributions and returns, the impact that's going to have on their investment in their life. And then, just the people I get to interact with, partners, potential partners, new people jumping into the space, kind of all of it. I love just being in a position to create that impact.
Dude, that's awesome. Impact of investing is something that I've been really talking about with me and my partners, and it's a great way to view this space, right? So, but thanks for sharing all of that. I know we kind of just started right out the gates and just kind of some heavy hitting questions, but you hit it back with some heavy hitting answers. But as far as the podcast today, I wanted to dive into what makes an elite underwriter and investor thrive. Not just in today's market, but any market. And Zach, I've always known you as like the numbers guy. It's just since I've been working at MFM, and they refer to Zach like he's the numbers guy, underwriting. Talk to Zach.
Yeah.
But he's a compass of what makes a great investor succeed. So, if we can kind of like bring it back a little bit, Zach, and can you kind of explain to us your role at MFM?
Yeah. So my role, it's been changing, forever changing over the last 4 years, from being a coach to growing the coaching department and bringing in coaches to help teach and then develop the curriculum to then being put into a mentor role. Like my role has switched. I've worn a lot of hats as we've grown within MFM, and it's been so fun to see that growth. Again, it's the impact we get to create. And at this moment, I'm more in a mentor role as I'm diving in full time on the investment side. And so I put a mentor role. So doing some webinars, doing some one-on-ones with students, and helping just them understand the process of acquisitions and underwriting.
Nice. And then what led you to MFM originally?
Yeah. So, super grateful for Tyler and starting MFM. The timing of it really just aligned. And I believe things happen for a reason. I was working for another multifamily company at the time, but we were looking to relocate. And at the time that we were relocating, we're in Colorado, and relocating to Utah was the time that MFM was out to be able to join on and help coach and also help on the acquisition side. So it was getting involved from a coaching standpoint and also acquisitions and helping from that. And so it's been a journey the past 4 years, growing with them, meeting different partners that have been able to join and work with and continue to grow.
Nice. Love that. And just to I want to shed a peek behind the curtain just a little bit. And earlier you had mentioned that, you're kind of shifting your roles and what you're doing in life as a professional. And you said that you're, shifting to become a full-time on the investor side of things, right? But also when you think of full-time, I want to be transparent on, like, you're not just a full-time underwriter, a multifamily investor, you're also a full-time family man, right?
That's
So
right, yeah.
can you just just give us a little backstory on who you are just today, just quickly, to share us where your time is going?
Yeah. So I have my little family. We got two boys. One's 4, and the other one is 9 months old. And that's where a lot of my time is spent. We were very fortunate to build a home recently and be involved in that process. We were very hands-on, getting involved in actually building the house and all that sorts. And now my time is spent with my boys and creating our little oasis and yard work, gardening. My wife's a huge gardener, and so we've been putting a lot work into our yard and creating that little homestead for us. So we have I can look out to a little slice of a little pasture out here that we have three cows on, and we got some chickens in the backyard, and it's just the start of it. So we're a little bit everywhere. Grew up a city boy in the suburbs of Colorado, and married a country girl in a small town in Utah, and that's where I'm at now, is a small town Utah, and trying to be a little bit of a country boy. So not sure how well I'm fitting into the mold, but I enjoy it. So a lot of my time spent on that side. Yeah.
Man, again, like I didn't even know that part of your life. So that's really cool to hear. So that's a great use of all your time. So that's great. So kind of shifting back into what we're talking about. I wanted to know if you could take us back to one of your first deals, and what almost went sideways, and what did it teach you about staying grounded?
Yeah. So my first deal was actually a triplex. It was my very first deal. I was actually in college in northern Utah State, and was just getting into the real estate space. Was figuring out what I wanted to do as a career. I came across real estate, and I just dove in, self-educated myself, YouTube videos, podcasts, whatever I could get my hands on, even into a mentorship group, and was just trying to find a deal to do. I knew I didn't want to do single family, fix and flips. Just wasn't the route I wanted to go. When I learned about multifamily, the scale made sense to me. It clicked. And so my first deal being a triplex was really interesting because it was on the market, it was listed. However, it was a duplex with a old vacant house attached to it. And the city wouldn't allow it to be a triplex. Many investors were trying to buy it and turn it into a triplex. The city said, no, it's not zoned for that. It's zoned for a duplex, and that's it. Where I brought in, that roadblock came up. So I brought in a partner, which was my dad at the time, being in college. He had experience working with cities. He's an architect, so he's done it. He's worked with cities, zoning, and all that. He came to the table, just talked to the city. There was this roadblock here of, hey, we want to make improvement to this town and this property. I know it's an eyesore. They wanted to tear it down. I said, hey, just allow us, grandfather us in, allow us to be a triplex, and we can make this work. And so we did. We made that work and renovated it. My wife and I lived in the house and helped finish renovations. The hard part for me was managing the tenants in the duplex. That I did not enjoy. And that was a struggle I had, was trying to, manage those tenants, those expectations. We inherited those tenants. And looking back, we probably should have replaced and put new tenants in there to reset expectations and what we wanted. And so that was a struggle. Working with the tenants. And that from that moment on, I said, okay, I'm going bigger, and I'm bringing property management company. They're going to handle the tenants on the day-to-day. I'm going to handle the investment side of it, and oversee that process. And that was a struggle, was dealing with those tenants for a year. And then at that point, when I graduated college, decided to move out and sell it. At the time, that was the market was pretty hot, and we're going to we got a 100% return on our investment there. So it was definitely well worth it. But that was the part that kind of went sideways, was interacting with tenants, and that was not my specialty there. So.
Yeah, you're like, people, nah, numbers, those are fine. They don't change.
Yeah, I love people, but yeah, when it came down to laying the law down, or resetting expectations with these people that have lived there for years, was a difficulty on my end. So definitely not a property manager. That's not what I am. But yeah, on the investment side, for sure, I can do things there.
Yeah, no, I mean, that kind of like, that's a great segue. It's like just where you started with 3, how you just ended that. You said, that's the last time I'm doing a small number. We're going big. And that's what MFM is all about, is thinking bigger. The higher the number, the door count, the better, or the more simple, you get the bigger the team, the better the team. Of course, there's much more that goes into it, but, you're not dealing with 2 tenants. You're, potentially hundreds of tenants, and it doesn't hurt all that much whenever someone decides to leave. You're like, okay, that's fine, you leave. As opposed to in your position, if someone left and it's like, now we got to scramble, figure it out. So that's awesome. That's a great story. And how you've kind of taken that forward is almost like you didn't stay grounded. You elevated yourself to a whole new platform.
Mm-hmm.
That's really cool. So I want to shift gears into talking about the mindset of a high-level underwriter. I think underwriting, I think other people can probably feel me in saying that it can be daunting to think about. It's a pretty tough task. It's a lot of numbers. It's the spreadsheets. It's tough. A mentor of mine, he always says, look at it like the gym. I think for someone who doesn't go to the gym all the time, as well, like, they don't want to go to the gym. There's heavy weights, and there's people who might be judging them, and et cetera. So I want to talk about the mindset of a high-level underwriter. So with that, what's the mindset difference between someone who underwrites a deal and someone who understands it?
Yeah, that's a great question. I mean, just going to answer first, so just like the mindset of an underwriter, it can be tough. It can be tough to be an underwriter, and the amount of deals you got to look through. And the big key is, who underwriting deal versus understanding it. A lot of that comes to really what I tell a lot of people that I think don't take advantage of this, but like utilize your resources. Anyone can underwrite a deal because underwriting is data entry to an extent. It really is data entry. Anyone can put numbers into a spreadsheet. You take numbers from a T12, a rent roll, and you plug it into a spreadsheet, and it comes out with the returns and what it looks like. Right. So anyone can do that part. The difficulty is really understanding it, and so that's understanding your market, understanding what rent can grow to, what's the capex, capital improvements that you can put into the property. How much is that going to cost you? How much can you raise rents? Can you be more efficient with your expenses? Or I see a lot of people put in a lot. Hey, we're going to cut expenses when they don't really look at the line items in the T12 and say, okay, that's a contract or that's an expense I can't ignore, and we're going to have to assume that for this property. We're going to have to take that on. So there's a lot of things you got to look into, but the way to understand those things is utilizing your resources. And what I mean by that is, you talk to your brokers that have the deals, that are listing the deals, that are posting them on, have conversation with them, understand the market a little bit. What are things trading for? What are rents? Where are they seeing rents at? Where are they seeing movement? What are they seeing from the sellers and what they're wanting to sell the properties for, and the whys there. And then the other piece is the property management companies. This is one that a lot of people, new people jump into the space, don't utilize, is build a relationship with a good property management company. They are going to help you on the expenses, on the value add, on the renovations. They're going to help you with all that. You don't have to, one, it's good, you got to do the research, but it's more verifying. The property management company, they do this day to day. If they're a good one, and they are in the multifamily value add kind of space, they're managing these properties every single day. They know what their expenses are. They know where they're pushing rents to. They know the level of renovations that they're doing in the areas and those costs. Like, they're so valuable. You don't have to understand all this information. You utilize your resources. And so I use the heck out of our property management company to help me verify those numbers. Now I get to a point where I understand where they're looking at in a market, how they're underwriting things, their expenses, the capex, to a point where I don't have to bug them every single deal I'm looking at, because now I know. Now I'm educated after I've done 3 or 4 deals with them. I know what that rules of thumb would be, for example, and I follow that suit. And then I verify with them when the deal's looking good. And most of the time now my underwriting's lining up with the property management company. And so now we're in line on how to operate the property. But those initial deals, like, I utilize them, especially when I'm going into a new market. I utilize them, and they help me understand how to underwrite a little bit better. So you don't have to know all the information.
Yeah, that's so great. That's such a great, everything you said there was so great. There's 2 things that really stuck out to me. And one of them was, that I just didn't think about, was contracts. You look at a deal and there might be contracts that are written prior to you owning, but like you said, you still assume those contracts or whatever it may be. And it's easy to look at the numbers and be like, okay, we just take everything out and look at it this way. Things are going to be this way. But don't forget that you might have some extra baggage there. And the other piece was collaboration with your property management group. I think you hit the nail on the head on finding a good one, but then it's maintaining a great, positive, collaborative effort between the two, because now your underwriting is the same. It's like, okay, we're right. We're moving together. So that's awesome. And one thing I'm very curious. I want to shift gears just slightly here. Still going to keep it on the underwriting thing, but leveraging AI in underwriting. Do you do it? What do you think about it? Do you think it's going to replace anybody, anything? What's your thoughts?
Yeah. So underwriting with AI It's still not quite there. AI doesn't have the biggest grasp on financials and on the number side of things, and so it can't do the underwriting for you. Some people will try, but it's just not there yet. Where you can utilize AI is helping with parsing, which parsing is where you take like your T12 and your rent roll, and it will look at those documents and be able to sort them out, and then take those numbers and input it into your underwriting template for you. So that's one way of kind of utilizing it. It's more data parsing, but AI is definitely helping speed that process up of inputting that data input into your template. And then the other piece that that AI is helping is finding rent comps and utilizing that piece. So someone that I utilize is Real Estate Labs with David Tupin. He's the founder of Real Estate Labs. He's very successful in the multifamily space. I've met with him a lot, and super knowledgeable in underwriting. And what he's done is create this software, this product that can do that for you. It can parse that data for you, so it speeds up your underwriting process by taking your T12 and rent roll, putting it into the template, and then also his software can pull rent comps for you. So it's not only like relying on CoStar, but finding rent comps that have a lot of similarities. And so they have this feature that can do that, and it's very helpful in speeding that up. And that's the extent of what I use AI for on the underwriting side. From then on, it's up to you to put your business plan together. AI is not going to do that for you. That's things that really take that. That person has to have that knowledge of the market of understanding the comps, whether that's you're in person driving the property, touring other properties, and seeing what you can do to this property. AI can't do that for you. That's something that a human has to do still. And so AI won't replace you on underwriting, but it can help speed up that process for the data entry and helping analyze some of that information.
Nice. So what I'm hearing is, if you're an underwriter out there, you're trying to leverage AI, is don't fret. It's not taking over, but it is a weapon that you can learn how to yield, and you can become such a better underwriter and more efficient, more swift underwriter because of that. Cool. Last question on this high level underwriting mindset is, I want you to answer this pretty like quick and just direct to the point, because I think for new people, new students, new people in this space, it's best to hear things quick and to the point, right? So where do most students struggle early on when learning underwriting, and what's that quick, simple, do this instead?
Utilize your resources, property management, brokers, CoStar, utilize those resources. That will speed your process up.
Love it. That's awesome.
Well, it's as quick as I can make it. Yeah.
Yeah. Well, I think of that as well. It's like you have your property managers, your brokers, everyone else that you're telling me to leverage, is because at the end of the day, we're all in this to make money. And if we see a nice big deal and they want to take it down, everyone's going to win. So collaborate and leverage the other people and your AI, learn how to yield it first, but then use all these weapons and all these people who are going to stand behind you and with you in this process, and success will be found.
Yeah.
So cool. So moving on, it's something we talked about the last time we spoke, and we talked about the evolution of your story. And I think where most people start, we jump into the space and we're thinking, okay, we got to raise capital for these $1 million sales, right? But I think in your evolution, you were telling me is like, okay, now we need more deals because we have the capital. Now we need the deals, which I thought was an interesting evolution. So I want to kind of talk about that, the evolution of investor challenges. So let's talk about the market evolution. What used to be the number one struggle, I think, for new investors, and what do you think it is now? And I want to take this from your perspective. So what was one of your first struggles, and what is that now?
Yeah, I mean, I think
It ebbs and flows. The struggles, sometimes the struggle is being able to raise the capital, and other times the struggle is to find the deal. I think we're in an interesting spot in the market that we're kind of in between. Some people are finding it pretty easy to bring capital, and so a lot of capital is coming. But the margin on the deals have shrunk, and expectations from the seller's end to the buyer's end aren't aligned. However, there are some deals that the owners, the sellers are struggling. They're in a position where they're kind of struggling. They need to offload the property. Those are the deals that are aligning from a buyer standpoint. But the sellers come with a loss. They lose investor capital and that equity in that deal. But those are the deals that are starting to align. So there's this struggle. Like I said, we're trying to find that next deal because the capital's coming. But I think it all depends on how you approach that avenue as well. Some people struggle with raising capital. I think it's not just the market itself too. It's also like you run your own cycle and ebb and flow in your own cycle of what you're doing. Now my role, like I have raised capital before. That's not my strong suit, and my strong suit is on the acquisition side and asset management. I enjoy those pieces, and so I spend a lot more time in there, and I'm really grateful I have a team that excels on the investor relations side and bringing investors in the fold. So I don't know if that helps kind of answer that of what people are struggling with now. I think it really just depends on where you're at in your journey and your positioning to what you're able to do. But in the market right now, yeah, deals are starting to pencil out a little bit better. They're still off some, but some investors are being really aggressive, thinking the market's gonna really go up again. So some are being aggressive with their underwriting.
Yeah, and I think that does answer my question pretty well. It's dependent on your journey. It's not. This is it's not going to be 1, 2, 3, 4, 5. It's going to be 1, 5, 3, 77. It's going to go back and forth, right? So that definitely does answer that question. And so now that you're kind of working at a different level, right? Like we talked about being grounded. We've elevated to a whole new level, even from MFM, right? So from what you're seeing, how are LPs evaluating deals differently now than they were 2 to 3 years ago?
Yeah, that's a great question because 2 to 3 years ago, things were going south. A lot of deals were struggling. That's where interest rates jumped up. That's where insurance doubled or even tripled in some markets. That's where taxes jumped up as well. It was a rough market, and a lot of deals struggled. A lot of deals failed. So there was a lot of investors that actually lost money 2 to 3 years ago. So you'll find that a lot of investors, these LPs, they're being very strict on how they're analyzing deals. Part of that is the deal itself. The other part is the operators. And really the best way is to be able to do your due diligence on the operators. What's their track record? How they've performed? Now, there's still really great operators that lost some deals 2 to 3 years ago. It's the risk you play with real estate is you have that risk, and it's understanding what that team is doing to mitigate those risks. And so LPs are starting to look at that and understand and try to spend more time understanding the deals and the operators than I think some kind of just blindly jumped in of, let me test out, syndicating, investing in a syndication and with these operators. Now they're being a little bit more hesitant with how things have happened the past couple of years and are looking at, things a little bit more in detail.
Yeah. So something there you're saying about 2, 3 years ago is when the deals came through and some of them failed. Are you seeing any opportunities through those failures? That some of these other operators failed and now they're trying to offload. So are you seeing any of that in the market?
Yeah, I mean, definitely. One that we're closing right now, here in July, that will be closing. That one, I know the sellers are selling for, actually both deals that we're closing right now, came because the operators bought it at the wrong time for the wrong price. They overpaid for it, and they haven't been operating it well. So one, it's from an operation standpoint, they just haven't operated well. But two, it's they bought it at the wrong time for the wrong price. They bought it at the top of the market, and now they're paying for it as the market's corrected, and pricing has dropped. And these two deals were buying basically close to what they bought it for 5 years ago.
Well,
And so
talk about a gut check, right?
yeah, it's a big gut check, for sure.
Yeah.
That's where the numbers work, and it was overpaid for.
Mhm.
Yeah.
So cool. Nice. So can you walk us through a recent deal where placing capital wasn't easy? What happened and how did you and your team adapt?
Yeah, so I'll share. I'll share what one of Ephes's recent deals that they closed on, last December. It was a $10 million raise, so it was a hefty raise, their biggest raise, and it took time to do. It was a struggle because they brought in a private equity group that was going to bring in a good chunk of that, and the struggle was the lender didn't like them. That's what it was. That the lender didn't like this private equity group and what their terms were. They were confused by the language in the contract, which scared them, and they won't let them be a part of the deal. And it was at a point where they were trying to close, and it was like a week or two before closing that the lender just wouldn't let them in, and so they had to scramble and find another alternative. Luckily, so here's the solution was, hey, I guess the options, sorry. The options were, do we allow this deal to fall apart and we back out? We give all the other investors that have brought their capital, we give them their money back, and we lose our due diligence money, all the money that we've spent into this deal, the pursuit costs. Do we lose that and lose the deal, or do we put our heads down and figure out how can we raise all this capital? And that's what they did. They said, no, we're going for it. We're going to figure this out. And I mean, huge props to the team, to Judd and Bo and even Caitlin, for just they put their heads down and they said, no, we're gonna commit to this, and we're gonna find a way. And they did. They found a way, and they were able to close the deal. And luckily, the seller was a little bit understanding on that and let them have an extension. And they pivoted. They said, okay, this one's not going to work, so we're going to put our heads down, and we're going to, whatever we can do to raise that capital, we're going to put our heads down and do it. And they did it.
That's awesome. That's an awesome story. That makes me think of when Tyler talks about the buffalo and the storm, about how the buffalo run into the storm, and that sounds like a pretty big storm. Of we almost lost this deal, and they're like, no, we're not. We're going to get it. So I love that. I hope that speaks to someone listening, and they might be going through a hard time, and they're like thinking about maybe we just put this one aside. But if you really want it, go get it. So cool. Thanks for that. I got 3 questions for you. I want to call it the rapid value round. Rapid value round. Want to get these answers pretty quick as we're nearing the finish of this podcast. You ready?
Yeah, let's do it.
All right. So, can you give us one daily habit? Can you give us one daily habit that keeps your head clear?
Ooh, that one's kind of hard. It changes, but the biggest one is spending time with my boys. That really clears my head. It's spending time with them. But other than that, it's either taking a nice bath in the morning or getting a workout in.
I just thought you were a family man, and you just let me know that you're the same person at the same time by taking ice baths. So let me ask you: are you taking ice baths in the middle of winter time over there in your farm in Utah?
I haven't yet. I haven't. I started doing them last summer, and then building our house kind of derailed it. So that's my excuse. But hopefully this winter I'll be doing them.
I'm expecting a ice pick to the big block of
That's
ice
right.
that's in there.
Yeah, that's right. Maybe we'll be in a horse
Cool.
trough next year in the winter. Maybe that's what we'll be.
All right. All right. Second question. One red flag in a deal that's easy to miss.
Ooh, that's a good one. Taxes and insurance. Those are two huge items to miss. I mean, there's so many red flags.
Yeah, I just thought of one from earlier that I learned was contracts, existing
Contracts.
contracts.
Yes,
Yeah,
yes, contracts. Discounting your expenses and not looking at what you need to assume on how the property is going to operate. Even if it's a correctional period that you're going to have raised expenses, then you try to get them down. But at some point, you're going to have to assume what current expenses are.
that's it.
Yeah.
So last one here. What's one mental principle that keeps you sharp?
What can I learn from this? Whatever it may be, that's what I ask myself. What can I learn from this? Every deal that we have to say no to, every deal that doesn't work out, every LOI that doesn't get accepted, what can I learn from this? Um, and we move on. We figure out what we can learn. We take the wins from that, and we move on to the next.
Love it. So, what would you say you're most excited about for what's happening within the multifamily mindset realm? To me, one major thing that you think is like, man, I'm excited about this.
Within multifamily mindset,
Yeah, just kind of what you're seeing, as far as this community and what's happening, what's exciting that's happening that you're just like, man, that's cool. I like being a
yeah.
part of this because of that.
Yeah, I mean, I think the biggest thing I mean, from the beginning has always been putting multifamily and mindset together is always big. It's always really changes your perspective. But on top of that, I mean, we're always creating new content. So there's some changes coming up with continuing to release new content. And then I mentioned this earlier, Real Estate Labs. We've created a partnership with Real Estate Labs and so that's a plug there. We created a partnership where they have integrated the MFM underwriting template into their software. So you can utilize their software to speed up your underwriting process. It's going to make you faster. You can look at more deals, utilize the AI features of the parsing, the rent comps, and be able to utilize that to help you underwrite more efficiently. Super excited for that. We just launched that a few weeks ago. And yeah, that one's going to be great to have that partnership with them. They're an awesome group, so I'm excited for that.
Yeah, that's awesome. That's great. That's great. Exciting things happening within the MFM ether. Also, David Tupin, he's actually going to be on the podcast with Tyler on his podcast on the outcome. So once that drops, definitely give that a listen. And final question from me for the people is, tell us your buy box. What are you looking for, and how do people find you and invest with you?
Yeah, I love that question. We're always looking for potential partners. The majority of our portfolio is in Minnesota. However, we're growing into the Midwest, so we're looking in new markets like Kansas City, Columbus, Ohio, Indianapolis. So what we need is we need boots on the ground people. We're a Utah-based company. We find partners that are boots on the ground. Ideally, they have some construction experience or have a partner that has construction experience, and we're looking for partners that are local to those markets, or we're open to other markets, Carolinas, the Sun Belt. I mean, we're open to those, but the main focus right now is into the Midwest and creating those partnerships to help us find deals. That's what we're struggling with right now is finding good deals that hit the returns that we need for our investors and for our fund. So if you are in one of those markets, you're in a growing market, you have that construction experience or have contacts in that space, reach out, let me know, and would love to partner. Now, in terms of criteria, we're looking for typical light value add deals, ideally 100 to 250 units, $7 million is kind of the low end on the price range, up to 15 to 20 plus million. The sweet spot is the 7 to 15 range. That's where we're closing deals. And yeah, I mean, we need the help on the acquisition side. I mean, if you're looking to also invest capital, love to talk to you. I'd love to send you to Jed and Bo, and you can talk to them. But really, that's the acquisition side right now. If you want to be a partner on a deal, we'd love to partner with you, for sure. So hopefully that helps. If you guys have further questions, you can definitely reach out to me.
Yeah, for sure. So if you didn't hear that, if you need to hear that again, hit pause, rewind about 60 seconds, and just listen to what Zach said. Especially if you're in the area, these guys are getting deals done. They're working towards $100 million in assets under management, and countless numbers of units, right? So that's awesome. We'll wrap it up for this podcast, for this MFM podcast. I'm Will Mussack. That's Zach Rucker. See ya.
Thanks, guys. Thanks, Will.
Multifamily mindset. Podcast. Think bigger.